Ravi Sood joins me now. He's the chairman of Galane Gold. Ravi, welcome back.
Always a pleasure to be here, James.
You bet. Ravi, without any hesitation, I can say that Galane Gold has really become attractive with the rising gold price and your ability to mine gold profitably. Now, I want to talk to you because you've got a sort of a global presence yourself and you operate in many different sectors about the macro picture for gold going forward and why I think we share the same sort of consensus that the outlook for gold is definitely bright, especially in the context of today's lowering interest rates. So on a macro level, what's your take on the future price of gold?
Well, that's a big question, James. What's my take on the future price of gold? I think let's go back to what's the cause or what's the driver for what will be the ultimate value ascribed to gold. And in my mind, that comes down to one thing. There's a lot of confusion, a lot of noise, a lot of catalysts, you could say, about what's moving gold up and down, things like coronavirus or interest rate cuts, noise from the Fed, that sort of stuff. But ultimately, it comes down to what is inescapably a sovereign debt crisis. So the math, you can't argue with. There is no way to get escape velocity to get out from under the amount of debt that the developed world has heaped upon itself. And things have not been fixed since the financial crisis. In fact, they've just been painted over and the ball has been kicked down the road using a toolkit of moves that we've never seen from central banks, from governments around the world. And they've succeeded. And one of the things that's certainly suppressed gold is the fact that the perception has been there as long as equity markets, real estate markets, other markets around the world have continued to be at new highs. Volatility has continued to be low, and it's introduced that sort of high level of complacency. So is there really a sovereign debt crisis? Is there really an issue with the US dollar as the global reserve currency? Well, it doesn't seem like it if the equity markets are taking out new highs every few months and there's very low volatility in capital markets around the world. As that starts to change, and it has, and pick your reason for the catalyst, whether it's been ultimately we're just running out of gas and there's no further response to these policy moves, coronavirus, whether it materializes as a pandemic or not, it's certainly done damage to economies around the world, and there's no escaping that at this point. Pick your catalyst. I don't think it matters, and none of them are really the ultimate driver for what's going to happen to gold or where it's going to be revalued to in dollar terms or in other paper currency terms. It comes down to that sovereign debt crisis, and now what's changed, why is gold moving? We've got those catalysts that are starting to break that narrative that says everything's fine, we can be complacent because equity markets are very high, they keep going up, everything seems to be working fine. We're starting to see the cracks in that, and that narrative's starting to drift down to Main Street again on gold, that maybe there is a serious issue with the US dollar as a reserve currency for the years going forward, and gold needs to be revalued higher and perhaps dramatically higher.
Sure. To what extent do you subscribe to the idea that the 90% of the trading in gold happens in paper representations of gold, and therefore that volume of trade and therefore the low price of gold is not really attributable to the value of gold from the perspective of global supply and demand metrics? Do you think that the fact that gold is traded as an ETF, as futures, as derivatives, is actually causing a distorted price performance and price sort of representation in the marketplace?
100%. And now we've just got in recent years, we've seen more and more information come to light that basically shows that it has been manipulated. In theory, adding all these different derivative products, different ways to trade gold, should add to the liquidity and improve price discovery and more rapidly have the price converge on fair value. That has not been the case. A great, very recent example is if you look at the lesser PGMs, and I'll highlight rhodium. So rhodium, as the physical market, the price of rhodium has soared. The price of palladium has soared. There are not elaborate paper markets on either of those that could easily distort the value. So the physical market is a very good representation of the actual value, perceived or otherwise, of those commodities. When we saw the huge downdraft in equity markets and hitting all markets, hitting gold, hitting everything last week, the everything goes down kind of scenario.
Right.
Rhodium physical price didn't change at all, but the ETF went down 20%. It completely decoupled from the underlying value of the rhodium that was in theory held or directly attributable to that ETF. That's a great example, a very real and very recent one, of a detachment between a paper value and the actual physical value of the metal. I think the disparity on gold will prove to be much greater. And certainly as a gold producer and somebody active physically producing gold, for whatever reason, and I cannot give you an explanation as to why, all I can tell you is what has happened in the last month or 2 months. We've seen an explosion in terms of inbounds of people chasing us for access to offtakes to gold, which has just not been the case really for us ever, being gold producers for almost 10 years now. Gold's a commodity you traded in London. You can buy it, you can sell it all day long. You can pick your ETF, you have all sorts of ways of accessing it, but it's not like it's been that hard to get your hands on gold. So why this huge explosion of interest in getting hands on actual gold? I don't know, but that's you have to take that seriously as an interesting data point that something has changed.
Interesting. So does this, I mean, Galane Gold is one of the only small, profitable, producing, publicly traded gold mining companies available anywhere in the world. And there really hasn't been an ability on the part of mining entrepreneurs to capitalize development of small producing mines. And that leaves you in a very sort of sweet spot in terms of being able to acquire those types of mines where you've demonstrated expertise. Is that sort of the case that the price of gold being low has created an advantage for Galane?
It has, I'd say not so much just the price of gold being low, but this protracted bear market in gold, and as a result, a protracted and vicious bear market in capital markets for gold and gold juniors has created a huge amount of opportunities for people like us. And why for people like us? Because we directly participate in every dollar increase in the price of gold. Every day of the week we're producing gold. Higher gold price means more cash flow for us. More money that we could redirect to other opportunities, including internal ones, but also potentially acquisitions, new opportunities for growth. Guys who are not directly participating in that gold price day to day, i.e. not producers, we haven't seen their shares move. In fact, they've moved sideways. If you took a basket of 20 gold juniors, decent names, good management teams, you'd find very modest performance over that. Of course, a lot of them are up, but just not anywhere near as much as they should be, really, with what's changed in terms of the underlying gold price and also the prospects for what gold could do in the next couple of years. So I think there's a huge opportunity for companies like us that have the capability of capitalizing on those opportunities. And there is a diseconomy to doing smaller mines. You never want to be doing really small assets. You have the same sort of top-level infrastructure and costs associated to a much larger asset potentially. So you do want to be moving up in the world in larger assets and leveraging your management team and your strengths to bigger opportunities. But I think this cycle is going to look quite different than the last one for junior golds and opportunities and places where people are going to find value creation. The projects that were sitting on the shelf from the 70s and 80s and 90s, they got developed in the 2000s. Going into this cycle, the pipeline, it's much smaller, and the nature of the projects is different. Harder jurisdictions, a lot more underground versus the easy open pit, more complex metallurgy to deal with, and so there'll be opportunities like that for management teams that can execute on those. Huge opportunity right now.
Incredible. All right, Ravi, let's leave it there for now. We'll come back to you in due course. Thank you very much for joining us today.
Thank you, James.